Welcome back to Trading Hour. As promised, we have some big numbers coming through today. So, pharma major Sun Pharma is due to report its second quarter earnings, and Ekta's here to give us the key expectations. Ekta, over to you.
Thanks for that. Well, definitely Sun Pharma has a lot of momentum in terms of its stock. So the expectations are high when it comes to its earnings. Revenue is expected to grow over 10% on a year-on-year basis. Margins are expected to probably come in at around 25 to 26%, and a profit decline on a year-on-year basis primarily because of a high base. Now, one of the key factors to watch is that, Taro came out with its numbers, which is basically Sun's US arm, just a couple of days ago, and that disappointed. The revenue was below expectations. The street was anticipating around 160 million. It came in at around $130 million. Adjusted margins was 0%, and there was a loss this quarter as well. So that might weigh in terms of the operating performance when it comes to Sun Pharma. But what might, in fact, dispel all of that will be specialty sales from Sun Pharma, which has, in fact, been showing a lot of momentum. For example, in Q1, the specialty sales were up 29% on a year-on-year basis to around $191 million, which were led by key drugs such as Odomzo, which is a cancer drug, Ilumya, which is a psoriasis drug, Winlevi, which is an acne drug, Sequoia, which is an eye drug. So all of these will probably help in terms of overall momentum for Sun Pharma, and that should trickle down to the margins as well. In terms of the US revenue on a consolidated basis, the street is anticipating maybe around $420 million to $430 million, which would be a growth marginally on a sequential basis. Overall, domestic markets is expected to grow around 14 to 15% on a year-on-year basis. Ex-COVID sales will probably be something that the street would track quite closely.
Thank you very much for that.